In this video, I will show you a very good gold trading strategy. So let's start. For this strategy, we will need one relative vigor index and ADX, the average directional index indicator. So it is not the simplest strategy in the world, but it performed really good on gold when I tested it. I have to tell you that this strategy can be used on any currency pairs as well and any metals, but I further optimize it for gold because in my opinion there are not many great gold trading strategies out there and I want to change that. So the numbers are the following. We have a relative vigor index that is a 50 period one. It is really important to use a 50 period one and not other else. I tested it with 99.9% data that I will show you at the end of the video. Then we will use an ADX that is for the buy entry a 3 period smoothing and 3 period length ADX. It is really important to use the exact numbers because they are optimized for gold trading. And as I said, it can be used on other currencies as well. But on gold, I wouldn't recommend to use any other parameters. Now, what is the strategy? The conditions are really important to follow, and not just one, but all the conditions, because most traders lose money in the Forex markets because of just emotional uncertainty and they can't follow their own rules. They move their stop losses and it is not a good way to go, and you will lose all your money if you do that. So follow all the rules. Basically, we will need an RVI, and when the 50 period RVI crosses above minus 0.09, and I will show it to you that it just here it does that. So it will be here somewhere. Yeah, it just does that, and it crosses above minus 0.09. Our first condition is great, and we can look for the second condition if that is at the right place too. Let's see. The second condition is that the 3 period ADX has to be above 29. And at this point, when we take the trade, luckily it is above 29 and not well above 29, but it doesn't matter because we are trade like robots. So when it is above 29, we can take the trade. Now, I hope you understand the entry rules of the buy trades, and now I show you the exit rules. As with the entry strategy, it is really important to follow the exit strategy. The exit strategy is pretty simple, so I really hope that you won't have too much trouble following it. Let's just jump into it. For the exit strategy, and it is really important because the whole strategy is a well thought out strategy. It is not just random indicators or price action patterns put together, but it is really well thought out. And we will need 2 exponential moving averages for the exit strategy. Now I show it to you how you can do this. First of all, you will need a 72 period exponential moving average, and I recommend to use a slightly more toned one because you can see it better in trading view at least. And here I will use a red one, and the second one is a 157 exponential moving average. Now you already see, in my opinion, what will be our first line of exit strategies, and that is when the smaller exponential moving average crosses above the bigger period exponential moving average. And here it exactly it happens, and it means that our first crossover condition for our exit is great. As you see, it is a pretty good exit strategy because and I will show you, of course, the 99.9% backtest, that most of the time it closes the losing trades early because we want to cut the losses quickly. We don't want losses to go forever, and it let the winner trades run, and this is the key. And now I tell you what are the other rules. One other rule is really important, and it is not some really tough rule, that you have to wait 200 minutes after the entry of the trade, and only after that you can look for the dynamic exit opportunities. It is really important. And there are two more rules. The first of the two is that you should only carry one trade at once per metal or per currency pair. So for example, you should only carry one trade at once on the gold, and it is because based on many years of backtest, it is what works. It is how you can stay profitable, because this way your emotions will be in line with your trading strategy and you won't stress out, and the strategy, the technical parameters are working this way even better. Now the second is a safety stop loss, a 1000 pip safety stop loss. If you are trading this strategy with Forex, don't ever use a 1000 pip safety stop loss. That is insane. But this is gold trading, so you can actually use such a insane safety stop loss, because with gold it is not that insane. And I tell you why. It is because if we would look at this trade on a chart that is a let's say XAUUSD chart, you would think that, man, this is a huge safety stop loss. But we are looking at the gold chart, and the profit on this trade is 3,131 pips. So basically here the numbers are really just not similar to a Forex market, and this is the reason why I recommend this safety stop loss. If you are a beginner, I tell you these things because if you are a beginner, these things are really important to understand in the beginning, that different instruments and assets have different volatility, and this will be a good way to adjust your stop loss. And even with a 1000 safety stop loss, we have a very good 1-to-3 risk to reward ratio on this trade. That is just a, it's just a great edge over the market. Now I hope you understood this exit strategy as well. Now I show you the sell entry and sell exit rules for this awesome gold trading strategy. I hope you enjoyed this video. If you do, please subscribe, because it is a new channel and I want to build a great community, and I have so much more strategy in my mind to share with you. Also, if you are just watching this video and if you want to add elements to your strategy from this video, that's great too. You don't have to use the whole strategy in itself. The main thing is to learn every day about Forex trading and learn new strategies and put one together that is for your style. Now let's start. What we will need is an RVI, a relative vigor index indicator, that is 50 period, and ADX, that is 27 period smoothing and 27 period length. It is really important to use the same exact numbers for the gold trading. So what is the exact strategy? The first condition is really simple. The first condition is that when the RVI indicator, that is 50 period, crosses below 0.07, and I will show it to you here because it just does that here, and in this territory your first condition is great because the cross happened and you can actually take the trade, but you have to wait for the second condition. It is that when we take the trade, the ADX indicator, that is a 27.1, has to be below 25. Now you might ask, why the hell? And it is because it is unconventional, because most people use this indicator in a way that it is completely symmetrical. So they use it in a way that, of course, the periods are the same for the buy and the sell entry, but because it is a trend indicator and it measures the strength of the trend, they use it in a way that, in my opinion, doesn't really work in every scenario. Of course, I use it too that way with certain indicators and certain strategies, but with the RVI indicator, based on my testing and stress test, I found out that it doesn't really work that way. And for the sell trades, we can't use it in a way that when it is bigger than a certain number, you know, the ADX is an indicator that measures trend. It doesn't matter if it's down, if the price goes down or up. We measure it if it's greater than a value, the trend is stronger. But here I use a below function and it really works because I tested it, and it is just interesting to me how with an unconventional strategy and with a combination of good indicators that are just good together in a certain way, a great strategy can be created. So I tell it to you one more time, when the 27 period ADX is below 25 and when the RVI indicator is crossing below 0.07, you can take the trade. This is the two condition. This is the first and this is the second. And now I show you the exit strategy because that is really important too. And as you see, it turned out to be a really good entry and really good exit for this trade. We have simple moving averages for our sell exit conditions. As you already see, with the buy exit conditions, we used exponential moving averages, and the strategy is asymmetrical. So we are using different kind of indicators and different parameters for the buy entry, exit, and sell entry and exit rules based on an algorithm that is really intelligent and that is combined with a stress test that is looking for an optimization without curve fitting. And so we get the good stuff, the good results. And now I show what are the exit conditions. The exit condition is really simple. It is basically the following. When the simple moving average, that's length, is 65, crosses below the simple moving average with a length of 140, then we can close the trade if, of course, the 200 minutes has passed after the entry, and it passed here, so that is a good scenario for us. And of course we carry one trade at once, and we have a 1000 pips stop loss. This trade is several thousand pips, so we don't need any explanation because I already explained it to you with the buy exit signals why we are using a relatively high stop loss, because we have approximately 1 to 3 risk to reward ratio even with this, because of the volatility of the gold. If we were trading the, let's say, XAUUSD with this strategy, we would use approximately 83 pip stop loss, and you can trade with this strategy on all the major pairs with that stop loss, but with the same or almost the same moving averages. Now, this is what I wanted to tell you and show you. I hope you really enjoy this strategy on gold trading, because in my opinion that is a pretty good gold trading strategy. And now I show you the 99.9% tick data quality backtest in MT4 on gold. Now let's see the 99.9% tick data backtest of this strategy on gold. As you see, the relative drawdown and the maximal drawdown is very low. It is only 9% with this strategy on gold. That is insanely good. As you see, a profit factor is pretty good too. And what I always look for in a strategy is the following. The average profit trade and the average loss rate are the two most important factors when you are looking at a statistic of any trading strategy, any trading robot. And here we have a better than 1 to 3 risk to reward ratio. That is insane. So we are better with this risk to reward ratio, even with this win rate. We are better than if we would have a 99.9% win rate strategy with a bad risk to reward ratio. And it is pretty simple to calculate that how much better we are with this in the long term, in the medium term, and what are the real. So why is that most hedge funds have an approximately 40% win rate? And it is at the same exact reason, because win rate doesn't matter. What matters is the risk to reward ratio. That is what the only thing that matters. And if you take a look at the largest profit trade and the largest loss trade, it is quiet. It is just insane. It is like so much. The largest profits is so much more than largest loss rate. If the two trades would be in a different universe somewhere, but it's the same strategy. So I highly recommend for you to consider to actually calculate the win rate and the risk to reward ratio equations, and with a simple calculation on a paper you will see what I am talking about. Basically, most of the time it cuts the losses quickly and let the winners run. It is the whole strategy, and I really like it because of that. And so yes, I hope you enjoyed this video. I hope you found it useful, and you can take a look at the initial deposit and the total net profit as well in 1 year. That is insane too. Yeah, try it out. First on demo, add some elements to it if you wish, or add some elements from this strategy to your strategy. Just play around with it, have fun. Yeah.